Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be doing a very quick 1 week recap of the M1 Finance Roth IRA. We're going to go ahead and take a look at the best performers, worst performers over the past week in comparison to the main indexes and compare our portfolio to see which kind of performed better. We're going to be taking a quick look at some of the news that's out there as far as a lot of investors on YouTube, on social media platforms, online, have been discussing moving out of the market and into funds that just have a yield. They just kind of stay essentially flat. They get 2-3% yield, 4% yield. And I've seen a lot of videos recently. So we're going to go ahead and kind of discuss really quickly my game plan going forward. So with that said, if you guys are brand new here, go down below, subscribe, make it gray, hit the bell to be notified on all notifications whenever we release a brand new video. We did release a new video, not going over like a monthly or a weekly update. This is the first quarter 2023 options. So if you guys are interested in call options and such, this is a really good video. I went over 3 different areas, how essentially I set up my option trades, some of the first quarter issues such as inflation and other areas of the world and things that just affected the market in general, and then my overall results for the first quarter. So if you guys haven't seen that, definitely check it out. And let's go ahead and get into the video. So right now, what is driving the market in the after hours? Right now, greed is driving the market. It is very much in the greed department. Over the past 2 weeks, the market has made moves to the upside, essentially just kind of moving just slightly up little by little, and it has essentially stayed above the 50-day moving average, kind of staying positive. If it retraces a bit, hits that 50-day, bounces higher, it could be moving to the upside by a great bit. But if it deteriorates, hits that 50-day, falls below it, and it could quickly go just the other way down south. So right now, greed is the main factor in the market. And I have seen a lot of investors using this time to kind of move into safety funds. So who knows, I don't know if that's positive or negative right there. Now jumping into our portfolio, taking a look here, the overall performance, we're still hovering in that 50% range. We're not moving higher, we're not moving lower. Essentially, our portfolio has hit a bit of a standstill along with the rest of the market, right? We just kind of topped off about 2 weeks ago. And now we're really deciding, is earnings going to push this market higher, or is earnings going to drive this market lower? And so far, a lot of indicators have kind of come out showing that earnings season this time is going to be a lot of stuff kind of negatively pointing negative going into the second, third, and fourth quarter of 2023. So we shall see how it plays out. Our best performers remain Apple, AbbVie, and Lockheed Martin. Main Street Capital did pull back from 3rd place into 4th place. Our worst performers continue to dive even further down into the red. Digital Realty Trust overtaking IIPR down 60%, IIPR down 56%. Essentially at this point, I'm not really touching these. They've lost so much. They're still paying out a dividend. I don't want to sell them because then essentially I would be locking in that nearly $1,600 loss right there. So I'm just going to go ahead and hold them and see how they do overall. Our market gains are almost $5,500. Our earned dividends is nearing $4,500. Just a couple more weeks, we should hit $4,500 in earned dividends. On a weekly basis, this is what we're taking a look at this week. We gained 1.79%, $751 of market gains, $60 of earned dividends. So essentially, we sat through a few X dividends this past week. So in the future, we should be paid $60.26, kind of rolling into the account over the next few bits. So essentially, how did we do this past week? And I feel like we did really good, 1.79 in a market that was kind of flip-flopping a bit this week, deciding if they want to lose or gain. Johnson & Johnson up 7.64. Essentially, I saw their lawsuit. That was some big news that came out this past week right here with their talc. Overall, I'm really surprised that J&J put on a 7.64% gain on the week. This could just be that, hey, they finally got that lawsuit behind them. There's a digit. There's now it's in place. It's cemented in place now. It's no longer going to be affecting them in the news. It's been cemented there. Merck up 6.05, Lockheed 3.59. Our worst performers, WP Carey, Digital Realty Trust, IIPR. These three right here are all real estate investment trust. We also have financials, JP Morgan in the red, ABM Industries down 1% there as well. So kind of interesting, ABM, no big deal right there. But overall, how did our portfolio do in comparison to the main indexes? Well, the S&P this week lost 0.10%, so essentially flat. They are really just kind of hanging out at about $406 if you guys follow the SPY. And there's not a lot. We've actually crossed over the 50-day. The market right now is really deciding, with earnings coming up, if the market will move higher or move lower. So it's at a standstill right now. It doesn't know what to do. Dow Jones put on a 0.63% gain, but you can see here, it essentially went sideways. It gained a little bit on Monday, nearly that 1%. And Friday, I thought that market was closed on Friday for Good Friday. Or maybe that was this past week. Yeah, okay, that was this past week. Friday was closed, but 0.63%. But you can see here, over the past few days, it was essentially flat. And then we have the NASDAQ losing 1.10%, but they were up nearly 17% on our last update. So just pulling back slightly. And the Russell here down 2.66% on the week. So overall, our portfolio actually outperformed the main indexes over this past week, which is surprising. But that goes to show you, Starbucks, Lockheed, Merck, Johnson & Johnson, they can have a big sway in the portfolio just by, a few individual holdings. So let's take a look at the S&P 500 overall for the 1 week. We can see that a lot of the market is still doing pretty positive. There were a few areas that were hit kind of negatively. You can see semiconductors in the red kind of very brightly as a whole sector, whereas technology, communications, consumer, energy, healthcare, financials, they were generally kind of mostly positive. There's a mixture there, but for the most part, it was pretty positive. But despite as much green as there is out there, right, that semiconductors kept the market essentially flat. With the technology companies generally, Google, Meta, Microsoft, Apple, Amazon, they generally push the market higher. Those financials and healthcare, those healthcare ones definitely moved really big this past week. And Tesla down 5%, but essentially the rest should have pushed it forward. So you can just see how divided it was. Generally, when you do see tech as high as it is this past week, it generally moves the market higher, but for whatever reason, it was essentially flat on the week. Now, kind of going from there, I did want to go ahead and share. I did see a lot of videos this past week going over how investors in some of the dividend groups on Facebook, on YouTube, they're on Fidelity or they're on Vanguard or they're on other platforms where they have money market accounts or they have some sort of other access. So SPACs is a good example here. If you're at Fidelity, you can get your money auto rolled into a couple different funds. SPACs is one of them. I think I have mine set up to also auto roll into SPACs if it's just kind of left in cash after a certain amount of days. You can see here that the 7-day yield on this money market fund is 4.48%. So that is extremely high for just kind of having no risk to you at all. You're not having any negative risk, but you're also not having any positive risk. So in a state right now where the market's at, it's hard to know where exactly you want to have your cash. Do you want to have it affected by the market potentially negatively or positively? And right now, I feel like with earnings season coming up and where the market is at right now, we're trending sideways. We're kind of deciding if earnings is going to be positive or negative. It's already starting to show that there are some cracks out there. So 50%, right? I would say that the market is more likely, 51% chance, more likely to go negative in the upcoming weeks with earnings versus positive in the upcoming weeks in the market. But that's just my idea, my opinion, right? Another thing that I'd like to throw in the hat, throw in the bucket, was Wealthfront. While SPACs does offer you that 4.48% yield, if you do have cash that you just don't want it in the markets, you don't want to have it in Fidelity, you don't want to have it in a broker, you do have access to high yield savings accounts. So they are offering a 4.3% APY by default on their savings. But if you go through a referral program or a link, I'll have a link down in the description below in the comment section pinned. If you go through one of the pinned comments on anyone that uses Wealthfront, you'll actually be boosted to a 4.8% APY over a 3-month period. So right there alone, you can go for 4.3 to 4.8 for 3 months. And then if you have other friends or family members that are interested in, also moving to a high yield savings, you can send them a link. And essentially over the past 12 months, you can have your APY boosted to 4.8, which beats out SPACs, which beats out the T-bill offer, the SPY, SCHD, DGRO. And while it's in a high yield savings account, you're not having it risked in the market. You're more than likely not going to be investing it. You might be tempted to invest if you leave it in a money market account. If you see like the market kind of dip a bit or go higher, you might get that FOMO and start moving it out of the money market fund and into something. But the market could pull back. So if you do have cash that you're just not wanting to have risked in the market, I would definitely suggest using Wealthfront, especially if you have some friends out there you can invite for that boost for 3 months. But that is going to be it for this 1 week recap. So let me know down in the comment section below, are you guys moving your money into money market funds, into high yield savings accounts? Are you keeping your risk on? Let me know down in the comment section below. I would be really happy to hear from you guys. So that is going to be it from me. I hope everyone has a good day, and I will see everyone in the next video. Bye-bye.